Hello, ladies and gentlemen. Welcome back to the XForceGlobal channel. Thank you very much for joining me here today. Hope you all had a fantastic weekend. Today, we're back with another Bitcoin analysis, and I'm here to make sure to update the price action from our prior videos and see how we can go forward with any new updated wave counts. As a quick disclaimer, I must cater to both the bulls and bears, so I hope my analysis shows a neutral approach to help build your own thesis on the bearish or bullish outcome. But nevertheless, I do share my main probabilities and the preference and personal sentiment that is deemed not financial advice. So without any further ado, let's start off with our first scenario that is now deemed as the higher probability, which is the double zigzag scenario of a WXY that is completed for this wave 4 termination. Now, I like this idea just due to the fact that I like to see the markets as a simple move and we're working in phases. So this idea of a wave 3-4 being completed, it really helps me personally as an Elliottian that we're working in completely different phase and we're working for a larger fifth wave to complete off this larger move. Now, if this is the case, we have two subcategories that we can be looking at this. So again, this idea that was deemed originally as a 30 to 40% probability is now deemed as a possible 60 to 70% of a probability just due to the fact that we had a 27% move off of the lows that is giving us a little bit more confidence in the bullish scenario, and we have more room to work with in terms of invalidations, and we have a few ways that we can look at the invalidations in two ways. So we have the first idea of a possible very bullish scenario is that we have a possible wave 1, 2, and then we're working in a 1, 2, 3, 4, 5 within a new extension of this primary wave 3. Now, there are very different ways that we can look at this because we have two invalidation levels like I have mentioned. But the first idea, this idea is extremely bullish because we have a large level of invalidation here. We still have to break these levels here to be deemed as invalid. But again, by the time we get to these levels here, we're going to have to start kind of reorganizing our probabilities once again that we may be working in a larger corrective scenario of that possible wave Y, which we'll be going over in just a moment. But this idea is still deemed very, very valid because we still haven't even broke this previous low that we're seeing this as a possible intermediate wave 1 and 2, and then we're looking for this wave 3 to extend of the smallest degree. So if this is the case, our target for this idea is going to be around $100,000 regions, 90 to 100,000 respectively. And then we have the more rational approach, which is my kind of idea or take on how I like to risk manage mine, is that just due to the fact that we're now also getting close to the possible invalidation for this wave 4, instead of labeling 3, 4 up in these regions over here, we're just replacing this wave 1, 2 as the possibility as a 3, 4 of the primary degree, and then we can be working for the last final fifth wave, which still brings up into a very handsome reward target around $75,000 to the $80,000 regions, depending on how far this wave 5 extends. So if depending on how far these levels extend for this last move here, and if we're still in a wave 5, we'll get a really clear picture, easily kind of know at that point whether this is going to be extending or not, whether we start to get exhausted on the momentum indicators on the RSI, MACD, and so forth. Then we can get a clear idea on whether this wave 5 is going to be concluding or not. So this is the more rational approach. This is the more ambitious approach. Both ideas are still very valid. We just don't know until time and data is given. But again, the main approach to these ideas is based on the rational approach. If this wave 4 is being printed already, we cannot go back into the territory of wave 1. And if we come back down, we can still adjust this wave 4 depending on how this ABC is going to be playing out, or WXY. We don't want to be entering the price territory of wave 1. That will invalidate this scenario. And then again, we're going to be resorted back to this idea of this possible 1, 2 idea, where it still has room to work with depending on how this wave 1, 2 is going to be playing out. But again, like I said, at that point, once we get to these major Fibonacci zones, we're probably working in some kind of different scenario, which leads me on to the second idea, which is the X-wave scenario, which was originally our main expectation. Again, these hybrid scenarios, remember, ladies and gentlemen, these hybrid scenarios, I always mention about hybridness of waves. We talk about, not many people talk about this because we can have a possible 1, 2, 3, right? This is the actionary wave, this is the corrective or reactionary wave, and this is the actionary wave, right? Remember, wave 1 can also be deemed as a wave A, this 2 could also be deemed as a wave B, and this 3 could also be deemed as a wave C, respectively, because the internal counts are going to be the same. So what that means is if we look at this idea here, we're utilizing these counts differently in terms of how we can look at the X waves, the W waves, and so forth. And what that means is that this first wave here is now deemed as the corrective wave, or the first corrective wave of the wave W, which is now seen as a flat idea. As we can see here, I subdivided this here for you guys for easy reference. And then we have another possible flat idea that we've been talking about for quite some time, actually, and it's played out very nicely. This was our expectation. Now, the expectation, that expectation doesn't mean that this wave X was the main idea, or it's just the main probability, meaning that this could be turning into something else. Because of this larger move up, we can now see this as a possible wave 1, 2, 3 now, because of that C wave. And because we had a 27% move off of the lows, the first idea has now become the higher probability, where this originally was a 60 to 70% probability. So because of this large move off of the lows, and because we don't have the perfect look for the wave C possibility of this expanded flat, that first idea is now becoming the higher probability for me personally. So again, how are we creating this X wave, or conclusion of wave X termination is that we have a possible A wave, a 3-wave move into wave A. Again, we're looking for a 3, 3, 5 for a flat idea, flat variation. And in this case, we have the expanded flat because we did create a new price extreme, which means that we have this new B pocket zone. And that B pocket zone is going to be going into that 123% to the 138% zone. And what that means is that because we had created a price extreme, we were looking for a wave C to the upside. Now, bearish or bullish at this time that we're trading, all the scenarios were looking for some kind of bounce or move to the upside, and that is exactly what we got. Now, we were looking for a better looking 5-wave impulse here, but again, this is not invalid. Again, this is going to be raising some kind of eyebrows and subjectivity to this nature of this count. That's why we have another possible X wave termination being the same zone, but this wave W termination is going to be deemed as here. So if this expanded flat idea doesn't seem like it's the probable case, there is a way that we can look at it where wave W has ended here, because we're just utilizing this larger move here as a wave C. So if you didn't like this idea of that 1, 2, 3, 4, 5 idea, and you want to utilize this zone as a possible 3-wave corrective move into that wave X, which does have a better look, in my opinion, that this X wave being quite relatively short in time, we can also create a larger wave Y because wave W was quite long in time as well, is that we have to now make some internal sacrifices, more so in the fact that this wave C has concluded as a possible 5-wave move to the downside. And the only way we can do that is by creating this very odd looking 5-wave move to the downside. So if you want to see this as a 3-wave move, you're now resorted to making sure that you have to also accept the fact that you have a bad looking 5-wave move for wave C of this move here. So really it boils down to what subjective nature that you're going to be looking at it, or the subjective approach that you want to be accepting. Do you want to have this as a larger ABC that's moving into this wave W to this move here, or an ABC into this, or have a possible better looking move for wave W here and then have the expanded flat, and then the internal move here is not going to be the best looking as an impulse move? Either or, the main focus should be the same, because wave X here has terminated at the same spot. What that means is we're looking for now a final move to the downside for a wave W. Now, if we look at the first wave X being complete, we're looking for a possible zigzag or idealized zigzag, as that is the preference of a correction. Now, remember, based on the alternations of corrections, if you're not familiar or kind of based in Elliott wave theory, this idea, since this was the first wave W as a flat, remember, wave Y can also be a flat, it could be a zigzag or a triangle. The first move, if it was a zigzag, it cannot be a zigzag as well. So in this idea, we can fit a zigzag in here, just completely fine, fits in the rules and guidelines of this idea. We're just making sure that we're going to be creating some kind of equilibrium zone. So if this is the wave W, again, we're looking for some kind of wave Y to terminate either right below the wave W or just in that range where the new price extreme was created. So that's the first idea for that kind of scenario approach. Now, the also possible approach is the bearish idea, which is the leading diagonal idea that has ended already as a wave 1, and we're still utilizing this move as a corrective move for a possible wave 2. Remember, hybrid ideas of actionary and corrective waves, they're all going to fit into some kind of different scenarios with each other. That's why the Elliott wave theory, in terms of managed expectations, as long as you're very versed in it, hopefully I'm able to help you guys to narrow down these scenarios as best as we can. But this idea, this wave 2, is also working in a corrective move, because remember, wave 2s and wave Bs are going to be corrective and they need to be 3-wave moves. So what does that mean? We have a 3-wave move into wave 1, 2, 3, 4, and then 5 as well, which is now creating this larger leading diagonal idea, contracting variation only, since we don't have any kind of larger expanding variation being created. We have all these series of 3s. Remember, leading diagonal can be a 5, 3, 5, 3, 5, or a 3, 3, 3, 3. And we have this idea as a leading contracting diagonal as a series of 3s. And we're looking for this overshoot to be complete for wave 1. And then we're looking for the same 5-wave move, same 3-wave move, same 5-wave move, either as a wave A, B, C, that if you're seeing this as a corrective move, again, that's going to be leading us into wave 2 of this scenario, and we're looking for a larger move here. Now, this idea is being very, very far-fetched in my opinion, meaning that it's very close to invalidation anyways. If this move goes up any further, I don't see any other bearish possibilities. I do think that we have a possible larger flat idea being created, but again, that's too early to call. Those have been quite invalidated quite many times actually. So this wave 1, 2 is now going to be complete, and we're looking for a larger wave 3 to the downside right after this wave 2 has terminated. But again, wave 2 has already retraced so high to the origin of this current, where this wave B was originally starting, or this wave top, this high here, is that we've retraced pretty much past the 886 Fibonacci level, even the 786 Fibonacci level. Any higher, I don't want to even think that it's going to be a possibility. So if we zoom in the shorter time frames, really not much to discuss, because the idea, we're still working in that 1-2-1-2 idea, right? So again, if we're going back to the idea where we were working for that double zigzag scenario where this wave 4 has completed, or wave 2, this 1, 2, 3, 4, this is the rational approach idea, remember? We're now looking for another 5-wave move into this primary 5th, and if it extends further, we're going to be creating that possible 1, 2 extension, and then we move the primary wave 3 up into where wave 5 of the intermediate degree is going to be completed, which is going to be seen here. So you can see if it continues higher, we're going to be seeing a wave 1, 2, and then an extension of wave 3, 4, 5, and we'll be working in the intermediate wave 3 if it continues that parabolic nature that we continue to the upside. So if that doesn't happen, very simple. All we have to do is look for 1, 2, 3, 4, 5. That'll end here, and we're going to be looking for any real signs of kind of exhaustion based on possibly RSI divergences, which is really typical of waves 3 and 5. You'll find divergences, bearish and bullish, to the upside and downside, vice versa, respectively, that you'll see a bearish divergence being created between waves 3 and 5. And then that's going to be a first sign of a possible reversal that might be working in a possible larger move to the downside. So again, we're being rational here. We could still expect more move to the upside. Again, that's just me personally, based on this 27% move to the upside, that these corrective moves are still shallow in nature in their own respective degrees, that we're going to be continuing higher, and that is how it's been for the past few weeks. Now, the other idea of, again, that wave X idea and how we can further go working down for that corrective move is a possibility of a leading expanding diagonal here, since pretty much all the impulsive scenarios for the bearish idea is exhausted. This move up here that we had in the recent week is still deemed as more corrective than actually impulsive. This move here as a 5-wave move doesn't seem like the proper way to do it, unless we do get like a flash dump that can help us kind of create a larger move to the downside. I'm just not sure how we can create that. Maybe this is a wave A of some sort, and this is the wave B, and then we're working for a wave C to the downside, or we'll have to see. We really just don't know. But for the now, current time of recording is that this looks more 3 waves, than anything else, and that we're creating a larger expanding leading diagonal variation, and it's already starting to get invalidated. As you can see, this trend line is starting to get fiddled around too much, and if we do break above it, then again pretty much all the bearish ideas or signs are getting exhausted again, and it looks like the bulls are trying to save these regions, and we still have some time to work with it. Again, in order for this to be validated, a leading diagonal of any variation, even the expanding variation, it cannot truncate the wave sub-wave 3. So for this idea to even be confirmed is that we have to break past this previous low, as we also want to make sure wave 5 is longer than wave 3. And that idea is going to be only validated if we break this level. And that'll also confirm our idea that this wave 1, 2, 1, 2 or 1, 2, 3, 4, 5 idea of the primary degree is going to be invalidated at these lows here. So that's pretty much it, ladies and gentlemen. In order to confirm it, we need to break these lows if you're bearish, and the whole story for the bullish scenario is now still being the current time at the time of recording, the main scenario, ladies and gentlemen, because we're still just looking for higher levels, and with these higher lows being created with each day being going on, we're just creating a series of higher lows. And that idea, if you're following the trend is your friend, right? So you want to be following that idea of following the trend. And I think that's the best way we can kind of put it at that as a conclusion. So hopefully that was helpful, ladies and gentlemen. Our next video is going to be based on the idea of how we can fit these ideas into the larger primary timeframes of the larger degree on the weekly time frame, and see what kind of nested structures we can create in terms of 1, 2, 1, 2 ideas, and what degree we may be working in. If this may be even a 3, 4, we may be even a wave 1, 2 idea, and we'll see how we can fit that into that. So hopefully that was helpful. If you're not in the XForceGlobal Discord membership, we do offer a membership. The link is in the description below. Please do not hesitate to contact me anytime. We would like to have you join. We have over 1,000 members now. And also, if you're not following me on social media, please do follow me on X, or formerly known as Twitter, at XForceGlobal. And I do a lot of daily updates on there as well. Hopefully that was helpful, ladies and gentlemen. Thank you very much. I'll see you guys in the next video. Bye-bye.